Now, this is an article from The Hindu, the editorial, dated 23 July 2022. Despite pressures, the Indian rupee's remarkable resilience. Even as the Indian rupee has fallen sharply against the US dollar, the rupee depreciation has been relatively lower unlike previous time. Now, this article dealt with GS Paper 3, Indian Economy, issues related to planning, mobilization of resources. Now, what we are going to learn from this article, what is safe haven as we have often seen in the news, the position of Indian rupee against US dollar, what is the role of RBI to control the depreciation of rupee, effect of weak. Let's start. The Indian rupee has depreciated by around 7% against the US dollar since the start of the year in response to various domestic and global factors. Let's have a quick look what are domestic factors influence the value of Indian rupee. Now first is rate of retail inflation, which is CPI in India. Understanding of inflation is a key to understand what is real effective exchange rate, which is RER. Now, the REER is a barometer whether the currency is overvalued or undervalued. Now, how we can understand? Let's take a example. If rate of inflation is 6% in India and the rate of inflation in US is 2%, then we could say that the Indian rupee must depreciate each year by around 4%. If it depreciates less than the rupee would be overvalued, and if it depreciates more than the rupee will be undervalued. Now the second domestic factor is real rate of interest. As we have often observed, if the RBI observes that there is high liquidity in the market, then it tends to hike the rate of interest, which in turn attracts the consumer not to invest or spend money, rather they prefer to keep the money in the bank, which in turn create a demand for currency and thereby appreciating the Indian rupee. The third is seasonal dollar demand from the importers and banks. There is a seasonal dollar demand for payment to their foreign parties. When demand for dollars tend to bunch together, we have often seen that there is a pressure on the Indian rupee, and this actually leads to weakening of the rupee. And the fourth is fundamental, fiscal and trade related factors that we would see in the global fact. Specifically, a widening current account deficit, persistent risk of sentiments as a result of geopolitical tension, a strengthening dollar index, and continuous sell off by foreign portfolio investors have all put pressure on the rupee. Now, let me give you a brief outlook of the whole scenario, including global factors as well. Now, coming on to global reason for depreciation of rupee. Rupee depreciated against US dollar due to global factors like Ukraine-Russia conflict, which have risen the prices of crude oil and which in return tighten the global financial condition. Also, we could see that the increase in the price of the crude oil have actually led to the increase in the prices of various core commodities like coal, edible oil, etc., etc., which have in turn led to inflation in the domestic market, which have actually affected the purchasing power of the common people, especially which are residing at the bottom of the pyramid. Now, this could be the major cited reason for rupee depreciation. But a good thing that since the currency of major economies like Britain, Japan, yen, and euro have weakened more than the Indian rupee against dollar. However, depreciation of a currency has its advantages and disadvantages both. On the positive note, depreciation of the currency enhances the export competitiveness because as the currency appreciates, import becomes costly, which made the imported good costlier, thereby raising the demand of indigenous goods, which in turn gives an opportunity for the substitute goods to excel. For example, if crude oil becomes costly, then it allows the alternative source of energy like solar energy, electrical vehicle industry automatically to gain its pace and flourish like anything. Secondly, when the depreciation of currency occurs, then the export gets cheaper because the foreign exporters gets the goods in less of dollars, which in turn enhances its competitiveness in the international market. However, sometimes it is advisable that RBI should not intervene in the situation and allow market to devalue the currency, which is at times good for the economy. Now the question arises, how RBI controls rupee from falling? As we know, RBI, a central bank, primary function is to manage and govern the financial system of the country. It is a statutory body which regulates the supply of Indian rupee. Now the first step it normally takes, it raises the interest rate so as to attract the holding of Indian rupee for residents and non-residents. If the interest rates are high, this enables the citizen not to spend but to remain the money in the bank. If there are no money floating, then this control excess volatility. Then there would be demand for currency which appreciates rupee. The second measure that RBI often takes, and it has taken in the recent month, that it swap the dollar with that of rupee in the market through foreign exchange market through its entities. Now Indian rupee has been sold. Now RBI sells Indian rupee through the forex, which is in the form of generally dollar, and purchase the rupee, bringing down the liquidity of rupee. This shrinks the rupee from the market and the availability of dollar is increased in the market. Thereby, the shortage of rupee leads to appreciating of rupee in the market. However, sometimes it is advisable that RBI should not intervene in the situation and allow market to devalue the currency, which is at times good for the economy. Now the question arises, how RBI controls rupee from falling? As we know, RBI, a central bank, primary function is to manage and govern the financial system of the country. It is a statutory body which regulates the supply of Indian rupee. Now the first step it normally takes, it raises the interest rate so as to attract the holding of Indian rupee for residents and non-residents. If the interest rates are high, this enables the citizen not to spend but to remain the money in the bank. If there are no money floating, then this control excess volatility. Then there would be demand for currency which appreciates rupee. The second measure that RBI often takes, and it has taken in the recent month, that it swap the dollar with that of rupee in the market through foreign exchange market through its entities. Now RBI sells the forex, which is in the form of generally dollar, and purchase the rupee, bringing down the liquidity of rupee. This shrinks the rupee from the market, and the availability of dollar is increased in the market. Thereby, the shortage of rupee leads to appreciating of rupee in the market. Specifically, a widening current account deficit, persistent risk of sentiments as a result of geopolitical tensions, a strengthening dollar index, a continuous sell-off by foreign portfolio investment have all put pressure on the rupee. This current account deficit I will explain shortly. Geopolitical tension I have already explained. Now let's discuss the continuous sell-off by foreign portfolio investors. Now when the rupee depreciate, the foreign investment, which is in the form of FDI or FPI, foreign portfolio investment, tend to depart. This led to the outflow of the foreign capital. Let's take an example. For example, $1 is equal to 73.50. Later, it become $1 is equal to 77 rupee. Now the best time for any foreign investor to invest is when the value of rupee is appreciated or the value of rupee is less, because they have to pay less dollar to purchase rupee. So this is the ideal time for a foreign investors to invest in India, because in few dollars they get more rupee. So this is a profit to the foreign investor. Now as the foreigner purchase more of Indian equity, shares or bond, this creates demand for the rupee. When demand for rupee increases, this also creates its value. So if the investor invest, it's good for India, because one, we get more dollars. Second, foreign reserve forex increases. Third, we can import more. If we have more forex reserve, then we are capable of importing more. Now let's understand this by taking another example. Suppose $1 is equal to 50 rupees. Then we get 100 rupees through $2. But suppose if $1 is equal to 63.81 rupee, then we get 100 rupees in $1.5, which is less than $2. So if an investor is investing in India, when Indian rupee is less, then we get more dollars. So if increase in demand for Indian rupee, then rupee appreciated against dollar. Then rupee appreciated against dollar, making the rupee more valuable and stronger. how recently minister in the parliament have made a statement that outflow of FPI is a major reason for the depreciating of Indian rupee, because recently, as we have seen, that dollar was depreciating. In order to curb, the Federal Reserve Bank have taken measures and they have tightened its monetary policy, attracting more of the foreign investors towards more safe haven, that is USA, to be invested. Let's discuss the current account deficit. Now, a better way of understanding the position of rupee movement against dollar is to have a look at the current account deficit of a country, which is nothing but a measure of difference of export and import. If a country's import falls short of matching with its export, then the country has a current account deficit. That means that we are getting less of the foreign reserves from the export than what we are paying to import. Secondly, if its export outmatches its import, then the country is having current account surplus. That means we are getting more of the foreign reserve, forex or foreign reserve from the export what we are paying to import. Let's discuss safe haven demand in detail. I have already explained. In a brief, let's discuss it widely. The dollar has strengthened against all currency, developed or emerging. We have seen consumer price index inflation in United States reaching a multi-decade high of 9.1% in June 2022. This has prompted the reversal in the monetary policy stance of US Federal Reserve. With inflation rising, the Federal Reserve is widely expected to continue raising interest rate in order to curb the inflation. This led to dollar index to strengthen by 11% in 2022. As a result, what had happened when they took an extreme measure of controlling the inflation? As a result, higher risk free returns began available in the US for the investors to invest. There have been persistent outflow of foreign portfolio capital since October 2021. As I have already mentioned that the FBI have gone out from our country and they have invested in US as it became a safe haven because of higher returns for them. This has intensified downward pressure on the rupee, because when they have gone, they sell the rupee, which inflated the availability of rupee in the market. They took back dollars with them, they sell the rupee, and this again led to depreciation of rupee. The safe haven demand for the dollar amid geopolitical risk have bolstered the dollar index. Again, taking a caution step, the Reserve Bank of India has stepped into arresting a large depreciating in the currency with intervention in the spot and forward forex. Elevated global crude prices have impinged on India's oil import bill. Like This has created a huge impact and raising the price of the import bill. In turn, widening the trade deficit, as I have already mentioned here. This situation, import becomes export, thus increasing the demand of US dollar, because if the import price is more, then we need more forex, which is in the form of dollar. So when this created demand for dollar, then in turn the dollar again have risen and affecting foreign reserves further. Effects of weak rupee. The implications of a weak rupee on the economy are multifold. Among the benefits is the premise that the rupee's weakening should aid exporters in becoming more competitive. But there is a contradictory statement that it does not always happen. Then the weakening of a currency leads to increase in the competitiveness of their export goods, because other factors also play an important role. For example, here it has been mentioned that not only India's currency depreciated, but the currency of other competitors have also depreciated, like South Korea, Malaysia, Bangladesh. So when their currency have depreciated, the intensity of importing goods have also decreased, which in turn actually had an impact on India's export. जब उनकी इंपोर्ट करने की टेंडेंसी ही ख़त्म हो गई है या फिर कम हो गई है, तो हमारे गुड्स जो हम एक्सपोर्ट कर रहे हैं वो कॉम्पिटिटिव हैं या चीपर हैं. इट हार्डली प्ले एनी रोल or it hardly matters to them. Again, it has been mentioned on the flip side, a weaker rupee is driving up prices of key import commodities such as coal, oil, edible oil, gold, impacting the imported component of inflation. As I have already mentioned that once the price of the crude oil increases, this in turn leads to the increase in the prices of other commodities which are dependent on crude oil, because in transportation of coal, oil, edible fuel is required, then the input cost naturally increases. So the prices of core commodities when increases, this leads to inflation in the economy. Now next is the RBI measures to control the depreciation of rupee. First, the RBI measures to control the depreciation of the rupee. Measures recently to liberalize foreign inflow in the country and make them more attractive. How? Measures such as promoting trade settlement between India and other countries in rupee terms, as we have recently seen that this settlement is called currency swap agreement. Currency swap agreement. Under this, we have a direct bilateral trade in their respective currency. So recently, the countries that has been put on sanction by America, like Iran, Russia, have agreed to have a bilateral trade in their own respective currency, and also UAE has also joined, Venezuela has also joined. Then offering higher interest rate on fresh foreign currency, non-resident bank and non-resident external deposits. So when they raise the interest rate, then there is more inflow of the foreign currency, and widening of investable universe of government and corporate debt. Second, relaxation in the interest rate and amount ceiling for external commercial borrowing, that have also contributed in arresting the rupee depreciation. The other measures that RBI has likely to take, the government could encourage some large market cap companies, private and public sectors to be included in the major global indices such as MSCI and FTSE And what are these? MSI is a American financial company whose headquarters is in New York. FTSE is Financial Times Stock Exchange. So this would allow our public sector companies to invest, gain the profit, get the foreign currency. So this in turn would actually compensate the foreign portfolio outflows. The third is the government could be expedite India's entry into bond indices, which will also lead to foreign forex inflows. Next is overall, even as the rupee is expected to remain under pressure in the near terms because of global uncertainty, high commodity prices and rising US interest rates, mitigation measures have to be taken to partly arrest the slide. Now, this point is foremost important point. An important measure on 11th of July has been taken by the RBI. This I would discuss in detail. The maintenance of US India's interest rate differentially along with timely forex market intervention by the central bank to manage volatility will prove to be a salutary in preserving the rupee value against the greenback. On 11th July, RBI took a bold decision and allowed payment for international trade in rupee. This move aimed to facilitate trade with Russia and other countries who are on sanction. Central banks move to take currency, the rupee, to its global level. Now let's understand what is SWIFT. How does it work? It is a very complex network across the global. The government, and it is run by government of US and Europe, and major chunk of the trade done through this network. Let's start understanding how does it work. Suppose there is an Indian trader who wants to trade with any foreign trader. Let's call it a Russian trader. Indian trader wants to import some of the goods. So what does this Indian trader do? It will deposit Indian rupee in its Indian bank account. Let's call it 1 crore rupee. Now this Indian bank will send a message to its Indian bank account which is there in America Bank 1. And now there is another bank, call it American Bank 2, who is having Russian bank account. So this Indian bank will ask the Indian bank to transfer a sum of dollars equivalent to that of 1 crore rupee to get it transferred in the Russian bank account which is there in Bank of America 2. Let's call it $1 is equal to 80 rupee. So this particular America bank will deposit 1,25,000 US dollar and it will deposit a same amount of money in its Russia bank account. When this happens, the Russian bank account will transfer an equivalent of ruble to its Russian bank, foreign trader. So this is the network, how it works, and it is run by a highly complicated network called Swift Messaging Network, and almost all the countries' account are there in Bank of America. And recently in the news we have seen that due to Russia-Ukraine war, America has debarred and freezed its account in Bank of America. So now Russia is not able to utilize its own fund which is there in Bank of America. So this is a trick This is a politics and this is a geopolitics, which always run around the particular interest. In order to improve the depreciating of rupee and in order to narrow the physical deficit or current account deficit, RBI took a bold step which will enable us to trade with Russia, because Russia is an important trade partner to India. In the notification issued by the government, decisions has been taken to bypass this SWIFT system and adopting another system called Vostro account. This system will decrease dependency and this will help us to ease our forex pressure in India. The government has issued a notification bypassing this SWIFT system and adopting another system called Vostro account. This will enable us to trade with Russia, which is a very important trade partner, and 13 billion of US dollar trade used to run across. Trade has been done with Russia. So this system will enable us to decrease our dollar dependency, and also this would help easing out our forex pressure. What is this Vostro account? Let's have a look in detail. This was the SWIFT system, Indian bank account having account in American bank, and all the account of all the countries are having their bank account in Bank of America. So we have actually bypassed this system and replaced it with a system of Vostro account. How does it work? Let's have a quick look. Suppose there is a Russian company that will have its account in Russian bank. The money is stored in ruble, and this Russian bank will also have an account in India, which is Russian bank account in Indian bank, where they would store money in rupee in Indian bank, and this account is called as Vostro account. So basically it is bank's bank account that held by foreign bank. In this case it is Russia's bank account held in Indian bank. Suppose an Indian trader wants to trade with Russian trader, so what does this Indian trader do? It will deposit a sum of money, let's call it as 1 crore rupee, in his Russian bank account in Indian bank, which means Vostro bank account has 1 crore of Indian rupee. This Russian bank will use its account in Russia to pay the Russian trader a converted sum of ruble using exchange rate. So that's how it is going to be done.